Will the inflation data give the Fed room to pause? Hi, everyone. Welcome to the Real Vision Daily Briefing. With me today is Mish Schneider, Chief Strategist at MarketGauge.com. Hi, Mish. How are you?
I'm great, Maggie. How are you?
You're doing great. Fresh off the road. You've been traveling around, right?
Yes, well, it's a time where, first of all, it's spring, so lots of conventions happening, but it's also a very interesting time in the market, and people want to know what to do, where to
Yeah.
go. And I'm so happy that people trust that I can provide that information, just like we're going to do today.
Yeah, and of course you look at everything, which also is really important right now because there's so many cross currents, there's so many things happening. So, we didn't see too much action today. Market's relatively quiet, but we have some big inflation data coming out this week, and of course we're fresh off the Fed meeting and the big jobs number from last week. How are you feeling about the outlook for the U.S. economy now? The Fed seemed more hawkish than people expected. How's that Modern Family holding up? What are you looking at?
Well, let's step back a little bit to the Fed because it was expected that he would go a 0.25% higher, and now we have Fed funds rate at the level that they were in 2006 at 5.25%. And also, we have a seasonality factor here where yields tend to peak in May. So if you forget about all of the conversations that Powell had with the press and trying to dissect everything that he said, the point is that whether or not we go one more 0.25%, it still feels to me like based on history, we are peaking in terms of those yields. And of course, it was the rate of change that made it so exciting for, for what happened with the market in terms of its downward move and the banks. So I just want to say that both junk bonds and high corporate grade bonds have actually held up really well. So last week when we saw the new dump from the regional banks, they kind of are staying flatline, which brings me to the Modern Family. We have pockets of great strength and we have pockets of great weakness. And I don't think I've ever seen the economic Modern Family so disparate in terms of where they are. And that's what is making it interesting and also difficult to trade.
That's so interesting. And so I think most of our viewers know by now, but Mish sort of, looks at the sectors as a sort of gauge of, to create what this basket that she calls the Modern Family, which is so helpful. So where do you see strength and what's struggling?
Well, in terms of the Modern Family, I think it's always important to say that even though it was my invention of this one index in key sectors, it turns out that Stanley Druckenmiller had said that the inside sectors of the U.S. economy, the areas where to look to really get the best gauge of what's happening are the Russell 2000, so that's the granddaddy, the retail sector, so that's grandma, XRT, and then the transportation, which is IYT. And even among those three, there is interesting things going on. For example, IWM, or the small caps, which really measures the manufacturing, is telling us that we're stagnating, that maybe we've contracted enough. And if the Fed does really pause here, not even start actually reducing the rates, but just pause, it's possible that contraction actually can begin to grow because we have good things like labor market strong, right? So I would say that doesn't mean that I'm calling for the end of contraction and we're going to hold, but I'm saying right now that seems to be the more obvious choice. Same thing with retail and the consumer. What is amazing to me is since I've been traveling, I've never seen stores, restaurants, airports, and planes more crowded. I mean, really, I like way pre-COVID even crowded because I've been to Vegas many times and it was amazing how many people. So what you're reflecting in the actual stocks and in that ETF basket in terms of consumer discretionary, yeah, there are obviously consumers are raising their own debts by borrowing against their credit cards. But at the same token, it's also showing maybe the contraction is over. We don't know yet, but I'm looking at 60 as a key level. And then transportation is just the opposite. It's actually in a bullish phase, showing that demand that is robust, that the goods are moving and people are moving. So, that's, and I would call those the middle of the Modern Family. The strongest one, of course, would be semiconductors. And Sister Semiconductors, as I like to call her, really represents obviously the chip stocks like NVIDIA, which rocketed again, and also represents some of the technology stocks, which have been doing very well. And that's in an expansion, forget contraction. That's showing an expansion in the 2-year business cycle. And then last but not least, but we could talk about biotech later, is obviously regional banks, which I'm amazed at how I had that in my family since 2014. And now basically regional banks, prodigal son, has headlined and driven everything, because I always felt it was the regional banks that would have the most influence ultimately than the big banks. And here we are. And of course, that's well underperforming. And the big question now is, did it bottom last week?
Yeah. And, we today just got out the Fed's quarterly senior loan officer opinion survey, SLOOS, right? Like something very few people watched prior to the banking crisis, but now everybody's fixated on it. And it showed a tightening of lending standards and demand, indicating to some that, listen, this is going to be a break on the economy. And there are a lot of question marks about these regional banks. Most people think there's going to be continued trouble. The question seems to be whether it ever jumps into something systemic. And right now, a lot of the people we have coming on say they don't think so. They don't know. How is the regional bank index looking to you? Does it look like it's stabilizing?
Well, the interesting thing about the regional banks is right in the beginning of March, I was looking at KRE, that's the symbol, right? And I noticed that it was breaking down before any of the other economic modern families really were. And I thought, is this some kind of a harbinger? And then whammo, 3 days later, right, was the big news with First Republic and so on. Now, last week, it actually dove down again when we had the more recent news about some of the other banks. And it gapped lower, and then the next day gapped higher. So it's not the strongest island bottom I've ever seen. I've seen much better ones, but it is right now an island bottom. And even though today we saw a decline in KRE in price, it's holding above where it needs to, which would be the intraday high of last Thursday, 37.05, in case you wanted to know that number. I happen to have it in my head. But anyway, the point is this. If that actually starts to decline and fills that island bottom gap, I would probably say we've got more bad news on the horizon. If it holds and we can swing back through in that KRE tomorrow, let's say over 38 or 39, then maybe the worst is over. And that's exactly how dicey it is right now. I mean, if we're looking at one day to the next day to the next day, it kind of tells you just how precarious everything rests on. And particularly when we're talking about those regional banks.
Yeah. You mentioned NVIDIA, the strength of NVIDIA, and we've been talking about AI a lot. We get a lot of questions about it. We've been talking about it. Raul's been obsessively, digging into it. And he had a chance to sit down with Sandy Cowell from Franklin Templeton, and they talked about all of the different ways that this technology will potentially change things. Let's have a listen to a clip of that, and then we'll talk on the other side.
But what I find so fascinating about AI is that it is going to likely be able to not only think about where you are now, but figure out what are the most likely and predictable pathways you are going to take from this current moment in time where you are, and how can we reshape commerce to actually incentivize you to take certain of those pathways over others. So I think that it's going to start to really build individual models of each person and be able to really tailor the delivery of the world to that person in a way that the person may not even realize they have those needs until they start being fed to them. So I thought that was a really fascinating part of this. And a lot of that is this agentive design. And we're seeing a little bit of that, like with the Nest systems in our homes, but this is going beyond that. This is an AI getting to know Raul and getting to know Sandy, and then figuring out, almost like our own digital personal assistant that lives with us, what are we going to need and what should it be marshaling in terms of our own resources. So I think that's a fascinating potential of where we're going.
And that full interview is available on our website. If you're not a member, just hit the QR code and you can jump on a trial. This topic just fascinates me. But Mish, the excitement around AI, we've seen it fueling a huge rally in the likes of Nvidia, Microsoft. Does it feel like that can continue?
Well, I think if the market continues up, we may see some rotation into other areas that have underperformed that would offer a little bit of risk reward at this point. But clearly, if everything stays as it is without some really horrible kind of depression at this point, which I doubt, then yeah, I mean, let's just look at Meta though. Meta's had such a spectacular run. And 250 seems to be a wall of resistance. We're trading at 232. Nvidia just had a spectacular run. I thought if it could get through 275, maybe it can go to 300. Well, it's in the 290s today. So as far as I see, I think we're running into some levels of resistance now. And of course, that doesn't mean we can't pop through. But in terms of the whole tech and AI space, there's been a couple of things in its favor. One is just name recognition and things that we use every day that people know about. Second, of course, is that it's been some kind of a safety play in that people are running into the growth stocks as opposed to the value stocks where they were going before. And third is that I think there's still a level of complacency as far as we're not going to have chip problems. We're not going to have a war, China, Taiwan, none of this we want to get into now. But there certainly seems to be some level of relief that these things can continue to grow and really hopefully lead the market out of any potential horribleness that could happen.
Yeah, it's interesting because, it was with those high rates, everyone was saying, oh, future earnings tech so vulnerable. We did see that big pullback, but is that behind us now? I mean, did the tech already kind of process any of the bad news?
Well, this is exactly what we're talking about. Tech was kind of first to really think that maybe we are near the end of rate hikes for sure. And tech, of course, was the thing that everybody wanted to buy into because, I mean, let's face it, you put on the media and that's what everybody is talking about. We have a lot of the stocks in our portfolios because of quant trading. So from a pure math, it's been the smartest thing. But, you and I kind of talk always more discretionary, so we could talk about other things. But yeah, I mean, I that is just spectacular. And at this point, like, look at Apple. Let's talk about Apple for a second. I mean, Apple just defied logic completely. And now looking at it today, after making a new high on Friday, all it did was have an inside day at these highs. When I say new high, I don't mean new all-time highs, but new recent highs. It's sitting there looking poised to go even higher. So at this point, I don't want to say cliche, but the trend is your friend. And right now, those are looking pretty hot. What is interesting is semiconductors had a split. It's very rare to hear an ETF split. 2-to-1 split. So now SMH is trading at 125. And actually, it's a little bit under where it was last week when it was at 247 or 246. But more importantly is if that has anything to tell us, it's telling us that there's more upside if it holds here.
Yeah, that's a great point. We don't hear that very often. I think you mentioned Palantir's out and soaring after hours too, right? Did you just see that cross your screen?
Yes, it was up last look, 22% right now.
That's a huge move.
Well, it's an $8 stock. So, we do have to make everything relative. So, but
maybe it's been disappointing for so long. Maybe it's finally starting to get going.
Right. And so it's involved with cybersecurity. It's kind of a defense stock. It's gotten some government money, obviously, in contracts. It was a stock I liked and then sort of gave up on. So it's good to see. We'll see if there's any kind of follow through. It's also probably very heavily shorted. So
yeah, me too. That was one I used to watch, and then wears you down after a while. So we have so many questions. I think I want to try to get some of them in because we have so many good ones. And then we'll flip back and forth. And they're all over the place. They know, I always say it, Mish can talk about almost anything, just in case you're not, I'm going to throw them all out there. But if there's something that you're not particularly watching, feel free to say so, Mish.
Sure.
Because we're doing this live. Okay. Oh my gosh. Wait, I just have to mention a really funny comment from Ralph. KRE said the reports of my death are greatly exaggerated.
Exactly. It's prodigal son. That's why I call him that. It's the great Bible story, right? Yep. Gets bailed out all the time.
Okay. So Robert asking, what does Mish make of, I think it's Cenex pullback, CENX, aluminum in general?
Well, it's such an interesting question because I just happened to look at that today. Well, that's a good question because I'm glad it's commodity related, right? I was like, oh God, somebody's got to ask me about that.
Oh, we got a lot of them. Don't worry, man.
Right. Well, copper did not do what steel and aluminum has done. And that's because they're more basic materials and they were more fear of recession type of activity that's been going on, more of a risk off when it came to aluminum and steel. Whereas copper's actually held up pretty well because copper, of course, has more industrial use. So, there's a difference between basic materials and industrial metals. So I would say the answer to aluminum is, this was impressive. It was much higher at one point, but that contraction in the economy, as I was talking about before, if we've stopped contracting, even if we don't necessarily grow and we kind of go more baseline stagnation or stagflation, which, we've been talking about for a long time, then it's possible that at this level, if you wanted to hold on to it, it wouldn't be the best opportunity to invest, but it could be a decent one. We actually bought CLF, Cleveland Cliffs. That thing got beaten to a pulp. We bought it around 15, exactly where it's trading right now, figuring unless we go into a deep recession, how much risk do we have? And that would also be a basic material, right?
Mm. Okay, this one was coming. David S., please ask Mish about sugar. Is it topping or more strength to go?
Well, what's interesting is that it got all the way up on Friday to about 26.5 cents a pound. And now today it's declined. And that's basically going to be the volatility of sugar. It is possible that it's run its course. I'm not going to say that that was the top per se, but I would say that at this point, I would be watching it in the next couple of days. And if it finds some kind of a stabilization between, say, 24.50 and 25, then probably it's just another dip to support. It was another one that had some kind of a key reversal on the charts. And so if you look at the highs and you think, oh, it could have maybe a 10% correction, that's where that 24 area would come in. And I'm pretty convinced that that would hold at this point because I still think that sugar shortages don't go away overnight.
Yeah. In fact, we have a lot of questions about ag commodities, but if we broadly look at them, Trillion X asking, is there a new bull market ahead for them?
For ags in general, you mean like grains?
I think he means ads in general. We have specific. I mean, there isn't a question that hasn't been asked. We have a more specific wheat, soybeans, and corn, but they're asking both broadly and then individually.
Okay, so I want to say happily, if we don't get to any kind of a deep answer today, Maggie and I are getting together again on the 19th. And that'll be a recorded session. So we can really go deeper into these things.
Yeah, it's extended.
Yes,
yeah.
Exactly. But for brevity's sake, and to get to everybody's questions, I will tell you this. DBA, which we've talked about a million times, that looks really good. I mean, it's been sort of trading now between 20.50 and 21.50. Let's call it that range. And that's very typical in terms of, so I think that that's still looking great. It's still showing expansion. And of course, wheat, corn, soybeans are in there. A lot of it is going to have to be from China in terms of consumption. This is why oil rallied today, because there was a story that China all of a sudden has had growth and is consuming more oil. I think the same thing could happen with the grains. Wheat is not looking all that great right here, but it might have bottomed. But here's the most important thing to keep an eye on. I have a friend who's very well informed who actually lives in Thailand. He's from the States, but he lives in Thailand. He told me that so much fertilizer that comes out of the Ukraine, we haven't heard about it in a while, but there could be some real shortages coming up. So I'd say my biggest tip for the grains is watch some of those FERT stocks like Mosaic, which right now doesn't look like anything, but that can change. If that changes, that tells you something's happening.
That's a great point. We actually, on the issue of oil, we have John asking about XLE.
Okay, well, I haven't really watched energy much because I'm much more interested in the commodity future of oil. And so I did look at Brent. So I hope you don't mind.
Yeah, go ahead.
Next time I can go deeper into XLE. I mean, we do know that, who was it? Buffett or one of those guys said they weren't, not Buffett, the other dude, said that he wasn't going to buy any more Occidental Petroleum. I don't know what that means. But nonetheless, in terms of the actual oil itself, so Brent traded up to $77, just shy of it today, a barrel. If you look at that chart, as bearish and as recessionary as everybody's facing that call on oil and energy going down, if that goes up just a little bit more past $80 a barrel, I'm talking Brent, not WTI. WTI was a little cheap, around 73. I have to say that, you know, all these PCE, CPI, PPI numbers are meaningless because they all exclude food and energy, the two areas I'm still most concerned about.
Mm. Yeah, when we meet for our extended, we'll have a little bit more of a sort of broad conversation about that, because it is very interesting. There is so much disagreement still about that inflation outlook. I mean, we'll get a little bit of information this week, but it's hard to kind of tease out, especially when you think about the cross currents. And it brings me back to AI. In fact, one of our viewers tweeted out a really funny something to a robot cleaning the floor at the airport and said, "I guess this is disinflationary or deflationary." So there are a lot of things I think we have to sort of see how they fall. Some people having a conversation asking each other what they think about the dollar. I'm curious what you think about the dollar.
That's a great question. Well, of course, we know that for years, Maggie, you and I have been talking about the world's reserve currency and its threat. And now that all of a sudden it's on everybody's lips, I'm kind of like, well, all right. Sometimes it's the anticipation of something and not the reality of what happens that gives you the best trade, right? That's really basically what my signature, I think, is trading based on the anticipation before anybody else, and then taking your profit on the reality. And the same is true in terms of the dollar. So right now, I love this 23-month. This is something that you and I are going to cover in much more detail on the 19th. But essentially, it's a business cycle within a business cycle. And in that 23-month, which is really 2 years, the dollar is above that 2-year business cycle. It actually comes in, if you're looking at DXY, at 100.7. It looked like it was going to break it, and it closed stronger today. So that tells me that the dollar and the reality of whatever happens at this point might be getting a pass. I'm very neutral right here. I wouldn't say I'm bullish, but I'm not as bearish as I was, based on the fact that with all of the talk, including Janet Yellen, about its threat as the world's reserve currency, it's hanging pretty tough.
Yeah, and many people have been looking for that to move lower. I mean, that's so many people have that call. So it sounds like you're saying it seems like a little bit of a crowded trade right now.
Definitely.
Okay, liquid gems. This just circles back to oil, but I think it asks a question in here. And Liquid Gems says, "This is the dream team, Maggie and Mish." Oh, thank you, Liquid Gems. What happened to the bull market? OPEC cut supplies. Why didn't it show up in the price?
Well, again, you always have to anticipate. This is, you know, it's easy for me to say, but don't forget, I spent all my years on the futures exchange, where it's all about anticipation and it's all about hedging whatever the reality is of what's going on with the raw material. And the same thing happened with oil. The anticipation that OPEC was going to cut gave us that rally, and then the reality of the fact that consumption, particularly in China, as I mentioned earlier, wasn't really meeting the fact that the supply was less. And, you know, and even though there's stories about our own strategic reserves and everything being low, it just, a lot of profit taking came in, and a lot of people use that as the end all be all to why we're going into deflation, disinflation, and recession, all of which right now people are being proven wrong. So that's what I think. I just think it was too far. It was after the fact. The anticipation was better. And now, if you're smart, now if we actually see the results only a month or two later than the news that it breaks out, now you can say, you know, maybe all these factors will start to come together. So, you know, there's like the knee-jerk reaction ahead of it. Then there's the reality. And then there's the new reality, which confirms what the fears are. Does that make sense?
It does, yeah. But this is why we need you on, Mish, because you can hold all of those views in your brain at the same time, where the rest of us are. We've got to think three-dimensionally.
It's exhausting.
Paul, I can imagine. I can't believe you know all these levels off the top of your head. I never ceases to amaze me. Paul English making the point. He's putting a quote in from Stan Druckenmiller a week ago about the only space I have any risk on right now is shorting the U.S. dollar, and I'm also long gold, obviously for the same reason. So, how are you thinking about gold here, Mish?
Well, it's another one. When we talked, months ago, it was at 1,600, and I'm like, gold is the best trade of 2023, and then it got up to like what, 2,070 or something. That's a pretty nice move, right?
Yeah, it was the best performing, I believe, for that first stretch.
So it's exactly an example of everything I just said. And then the anticipation was the best trade. The reality, now it's kind of going sideways. And the question is going to be, is that reality going to be confirmed with more fear? The fact that it hasn't really sold off very much tells you that there's still a lot of fear out there. And yet, at the same time, if the market starts to relax and the banking's resolved to a degree, and these sectors that we just talked about show a lack of more contraction in the economy, and the Fed backs off, it could be that gold will need to come down a little bit, and then it'll be, I still think, a buy opportunity unless peace breaks out all over the world. But I wouldn't be buying it right here. No, that's not. To me, I'm riding our tail, and we only have a tail at this point. I'd like to see a more decent, I'd like to see everybody give up on gold, and then I'd be more interested in it. Not that I'm always a contrarian, but in this case.
Yeah, no, that makes sense. What about silver?
Well, silver also is about 25 and a half dollars a pound, right? Not cents, that's sugar. Dollars a pound, and an ounce. God, see, this is where I'm starting to short wire here. So $25 an ounce for silver is good. I think that silver also has, more of an industrial usage. So if copper holds up, you'll start to see silver hold up. We are long silver. Again, I probably would want to see it clear maybe 27 at this point. So you'd have to assess your risk reward. I would not want to sit around if it starts breaking down back under $25.
Thank God every once in a while you trip on something, Mish. Otherwise, we would think that you are AI joining us. So it's giving us some hope for the rest of us. Avery has a question that a lot of people were interested in, and I'm hitting you with this cold. So if you don't have a thought about it now, maybe we can pick it back up when you come back on. Asking about your thoughts about a Yuan devaluation and how lower oil prices might increase the likelihood. Are you looking at the Chinese currency at all? Thinking about that's a big question.
Yeah, I'd like to table that. I don't want to make up an answer. I could tell you what my gut says, but I prefer if you can hold on that. I was pretty clear on the dollar, but I haven't really done enough research into the yuan versus the dollar, or the yuan just on its own accord.
Avery, join us. What day are we doing that? Are we doing it on the
19th?
The 19th?
Yeah, I mean,
join
I
us on
could
the
say
19th.
that if China's consumption of oil is increasing, that wouldn't necessarily be bearish for the yuan, especially as some countries are starting to price oil in either yuan or gold, and not necessarily just in petrodollars.
Yeah, although it's so hard to know. Like, there's a lot of talk about that, and I think there are people who are interested in having a lot of talk about that. I always wonder how much it's really happening. I think it's tough to get some really accurate data on that. There's a lot of politics, a lot of geopolitics layered on that conversation.
Absolutely.
Which is why I think we can, dive into it a bit the next time. Bar is asking, what could be the next catalyst for the market to have significantly positive performance? I'm going to guess, Boris, that you're talking about the equity market. And I'm going to go with S&P 500 just because you didn't specify. But U.S. equities, Mish, what do you think a catalyst could be?
Well, we can talk about
chart,
that
or
more
level
too. But let's look at the SPY, right? The S&P 500, because that's, obviously the top 500 stocks, and very important. Not necessarily as important as small caps to the U.S. economy, but definitely important to the stock market. And so right now, I actually looked this up today. So you had 102 stocks that made new 52-week highs. And I thought it was interesting because Shopify, O'Reilly, Shake Shack, Builders First Source were a few. And you had 111 stocks that made a new 52-week low. And I really couldn't find anything all that great besides Match.com and Tyson Foods. And I know I say that with a little bit of a sense of humor. Mm-hmm. But the SPY itself is in a bullish phase on both the daily and on the weekly chart. So you'd like two time frames right now. We're above the 50 and the 200 moving averages. The momentum is a little bit more diversified in terms of, or I should say more of a divergence in terms of the weekly chart. The 50 is under the 200 in the momentum indicator where it's above in the price. Maybe that's where a little bit of a pessimism still lives. But if that momentum improves and the SPY can take out this 420, I think that's got to be bullish. How long would all depend on the small caps. That's the best answer I can come up with. If the SPY goes up to 430, 440, and IWM is still, I almost said, all right, digging around at around 180, 190, can't get through 200, then you know the rally's going to be short-lived. But if it gets through 420, you're definitely going to see more upside. There's no doubt about it.
I love it. You all turned up with some great questions today. I love it. We got through most of them. Mish had some picks. We don't have time for that because I've got to let her go. She's got a heart out. But Mish, when you come back, we'll talk about some of the stuff that you're looking at as well as some of the other macro stuff.
I'd love to.
I like these picks. We'll have a teaser. There's a country pick in there. You might, if you follow Mish, you probably know what it is. But we'll dive into that next time. Mish, thank you so much. Always fantastic seeing you.
Thank you so much.
And we'll be back tomorrow with Jeremy Schwartz of Wisdom Tree. So we'll be digging into some ETFs. And at 1 o'clock live, folks, we have a new 3 ideas with Roy Barron from Westchester Capital Management. So be sure to tune in for that. As always, we look forward to seeing you next time. Take care and good luck out there.